Bitcoin, the end of money as we know it. The age-old proverb "money moves the world" is as relevant as ever in today's society, and it will very certainly remain so till the end of all time. However, with the rise of Bitcoin, there is a possibility that the future of money may be web-based, non-physical, and decentralized. This would be a significant shift from what we currently understand to be the case with money. Money is the one thing that unites all of us, regardless of our different nationalities, genders, religious backgrounds, and other backgrounds. Our life, society, and the globe all move ahead as a result of this. We all work hard to earn and save money to provide for our basic needs, such as food and shelter, and move closer to realizing our goals and aspirations. For many of us, cash or money refers to real notes and coins issued by the government, which we then use or keep in banks. These bills and coins are referred to as currency. Yet, over the previous 10 years, Bitcoin, a type of digital/virtual currency, or cryptocurrency, has been making significant headway, gaining momentum, and drawing the attention of numerous financial and technological sectors. Bitcoin was first introduced to the world in 2009 by an unidentified person, or group of people, with the pseudonym Satoshi Nakamoto. It was his present to the world, a way out of the economic shackles imposed by modern banking and financial systems. This was his legacy. It is a whole new type of currency that is not governed or managed by any government, central bank, or other financial entity in any way. Bitcoin is not held by anyone, but rather it is owned by anyone who uses it. Its creation is a direct response to the pervasive corruption that exists inside the world's existing monetary systems, as well as their persistent manipulation of the money that we have worked so hard to achieve. The economy and the means to attain political power have always been controlled by those with the most money. The transition from hard currency to fiat currency made by governments around the world in the middle of the 20th century was a pivotal moment in the history of money. When the value of money is tied to a physical good, such as gold or silver, this type of currency is known as hard currency. On the other hand, fiat currency is when governments issue money and announce its worth without the requirement for it to be guaranteed or backed by anything other than the fact that we accept their word. This type of currency is created when governments print money. These days, central banks all across the world produce new currency out of nothing by printing it, called magic money. This money is funded by debts, interest payments, and other such things. The majority of financial institutions support this system, even though it results in the devaluation of money due to inflation. Because of this, they can grab more of our money while we are completely unaware of what is going on. It is believed that individuals would have a better level of control over their finances and benefit from reduced interest rates and fees with the advent of Bitcoin. It does not have a physical representation, and all individual balances and debts are posted on a decentralized and open ledger that everyone can see. This ensures that there is complete transparency regarding the transaction. Bitcoin can empower roughly 3 to 4 billion people in the third world in today's internet-driven world by removing the crushing 10 to 30% service fees that are charged by corporations like Western Union when they need to transfer or receive money. Even though it's been 10 years since Bitcoin's price bottomed out, the cryptocurrency's future is still wide open. Will the global economy continue to operate under its existing structure? Or will Bitcoin disrupt the established financial system and revolutionize it? The only way to know is to wait. Since they were first made available to the general public in 2009, cryptocurrencies have witnessed a meteoric rise in value, both in terms of their utility and their appeal. Many of them are accepted by a significant number of retailers and merchants, and investors are looking at them as a potential means to make returns and store wealth. The world's governments are scratching their heads about the best way to tax and regulate them. Because of its programmability and versatility, the blockchain ecosystem known as Ethereum was the first to launch not only a cryptocurrency but also several different use cases. Today, businesses and entrepreneurs are utilizing Ethereum to develop new forms of technology, goods, and services. The burgeoning metaverse that has the potential to integrate our digital and physical lives is primarily based on the blockchain and ecosystem that Ethereum provides. This decentralization of finance is also based on Ethereum. With so much attention being paid to digital assets, cryptocurrencies, and the merging of realities. One of the many debates that are worth having is the one over whether or not cryptocurrencies will eventually replace fiat currency. Find out what is driving these conversations, and investigate the potential effects that this shift could have on the economies in which it takes place. The term money is used by a variety of organizations and regulatory bodies to refer to anything that is a unit of account, a store of value, and a generally acknowledged method of exchange. Since the beginning of recorded history, fiat currency, often known as real or physical money, has been able to fulfill all three of the aforementioned criteria. Yet, developments have already begun to lessen the necessity for real currency in most developed countries. This trend is expected to continue. Debit cards and other forms of electronic transfer are gradually taking the place of actual cash, which is resulting in the development of a system in which governments, banks, businesses, and individuals all transfer funds by having a third party alter the corresponding numbers on an electronic ledger. It is impossible to conduct transactions without the involvement of a third party, which contributes to the high expenses associated with the upkeep of financial systems. The fact that cryptocurrencies in their current form are not constrained by national borders or regulatory frameworks can be viewed as having both positive and negative implications. In contrast to the manner in that central banks in industrialized countries regulate and influence the value of fiat currencies, these currencies are not subject to such control or influence. Interest rates and open market operations are two of the primary tools of monetary policy that central banks utilize to exert influence over inflation and employment levels. These methods are rendered obsolete as a direct result of decentralization, which is one of the core concepts underlying Bitcoin. The implications of completely abandoning the use of fiat currency are currently being researched and analyzed in greater detail. Either the move will have huge negative effects on the stability of the economy and the financial system, or it will usher in an era of total stability all over the world. The International Monetary Fund, IMF, advises against using cryptocurrencies, like Bitcoin or Ethereum, as main national currencies, while they are in their current form due to the high degree of price volatility. In addition, the group thinks that concerns regarding the threats to macroeconomic stability, as well as a lack of protections for consumers, should be addressed. Nonetheless, the IMF does acknowledge that the adoption of cryptocurrencies is most likely to take place more quickly in nations where the risks associated with cryptocurrencies represent an upgrade to the existing financial system. It is quite evident that cryptocurrencies' use as a currency can only benefit from its boundless potential. As an illustration, after fleeing the Russian invasion in 2022, a significant number of Ukrainians turned to cryptocurrencies. Many people might not have had the financial means to survive if cryptocurrencies had not existed. It is also being utilized by many people in nations where there has been a significant devaluation of the national currency to protect their savings, send remittances, and conduct business. Cash is the tangible form of fiat money, and cash transactions have been on the decline for some time. Because of this, cash use will probably continue to diminish, and something else may replace it. The majority of financial transactions now take place using debit and credit cards rather than cash. This is the end of today's video. Do you find it helpful? Must give your response in our comment section below, and don't forget to subscribe to our YouTube channel for more videos.